Okay, let's dive right into this explainer. Today, we're literally popping the hood on the world's most famous cryptocurrency. We're going to look at Bitcoin from two really vital angles: the engine that actually powers it, and the, well, sometimes bumpy road it's driving on right now. We'll explore the core tech that makes it tick, and then we're going to analyze exactly how it's navigating these turbulent financial roads we're seeing in July 2026.
Now, you might be following the market swings, right? But before we can truly understand the ETF inflows or the crazy price resistance levels, we have to start with a foundational question. How does this thing actually work? Seriously, how does an entire global network function securely, around the clock, without a central bank or a single CEO pulling the strings?
Well, the answer lies right here in the blockchain. Think of it like a giant, indestructible public spreadsheet. It securely and transparently logs every single transaction without needing any middleman to verify it. This ledger is absolutely the core engine of the entire Bitcoin system. Honestly, it's what makes the whole concept of decentralized digital money even possible in the first place.
So here is our roadmap for today's explainer. First, how the blockchain works. Second, mining and security. Third, how ETF inflows are currently driving the price. And fourth, we'll look at the key risks and roadblocks ahead.
All right, part one, how the blockchain works, the digital engine.
Let's actually track a transaction. Step 1, a user decides to send some Bitcoin. Right away, in step 2, the network's computers, we call them nodes, jump into action. They verify the digital signature and make sure the sender actually has the money they're trying to spend. Once that's verified, step 3 moves the transaction into a sort of waiting pool. Finally, in step 4, a miner grabs it and securely locks it into a block. This step-by-step process is crucial, guys, because it entirely prevents double spending. You literally cannot magically spend the same digital coin twice.
Moving right along to part two, mining and network security. Let's see what protects the network.
Since there's no central bank running the show, the network relies on something called proof of work. It's basically the world's most intense, high-stakes math competition. Powerful computers all over the globe compete to solve these incredibly complex mathematical puzzles. They're all racing to find a specific random number called a nonce. The winner gets to validate the transactions, and boom, they're rewarded with newly minted Bitcoin. This takes a massive amount of computing power, which effectively builds a giant, impenetrable security shield around the whole network. So what's actually inside one of these tamper-proof blocks? You've got your transaction data, a timestamp, that nonce we just mentioned, and here is the real magic of the blockchain, the previous block's hash. Because every block explicitly links to the digital signature of the one right before it, they form an unbreakable chain. If a hacker tries to change even a single transaction in an old block, they'd have to completely redo the insanely hard math for that block and for every single block that came after it, faster than the rest of the world combined. It's just practically impossible.
But, there's always a trade-off. The main Bitcoin chain is highly secure, for sure. But because of all that rigorous checking, it can only process a limited number of transactions per second. It can be a bit sluggish, and fees spike when the network gets crowded. To fix this, developers built the Lightning Network. Think of it like an express carpool lane, built on top of the main highway. It's a second layer that handles your faster, cheaper, everyday transactions off the main chain, and it only settles the final balances on the super secure main blockchain later on.
Okay, on to part 3. ETF inflows drive price. Let's talk market performance.
Take a look at this number, $63,840. This is our current price anchor for today. After a period of really brutal selling and heavy market pressure, Bitcoin has impressively reclaimed that critical $60,000 support level and is hovering right near this $63,840 mark. It is showing some serious resilience.
So what's actually driving this recovery? Well, check out this next big number, $265.7 million. We are witnessing a massive return of institutional demand here. In just a single trading session, $265.7 million flowed directly into U.S. spot Bitcoin ETFs. That is a massive, massive injection of capital from traditional finance players.
That sudden $265.7 million spike for Bitcoin, it abruptly ended a grueling 8-week streak where over $8.2 billion had just bled completely out of the market. And the crazy thing is, it wasn't just Bitcoin. We even saw fresh capital flowing into Solana ETFs, about $8.36 million, largely led by Bitwise's BSOL. This tells us that large institutions might be looking at these recent lower prices as highly attractive valuation floors.
The technical engine underneath all this is looking really healthy too.
The RSI, the Relative Strength Index, has cooled down to a very manageable 54. So the short-term price momentum has eased off from being overbought, letting the market catch its breath. Meanwhile, the price is holding firmly above the 20, 50, 100, and 200 simple moving averages. Broadly speaking, those long-term bullish trend lines are still very much intact.
But right now we are in a massive market tug-of-war. Look at these support levels. Buyers are stepping in immediately around the $61,500 to $62,000 mark. The major floor is $60,000. But on the flip side, sellers are heavily defending that $64,000 to $64,100 roadblock. If the price can smash through that immediate resistance with solid volume, the next major battlegrounds are going to be $66,000 and then that massive $70,000 milestone.
Which brings us to part 4, key risks and roadblocks. Let's check the macroeconomic weather conditions.
Because it's not all sunshine, right? We're objectively seeing several external pressures. Persistent global inflation and central bank interest rate decisions definitely have investors on edge. Add to that the escalating geopolitical tensions in the Middle East involving the US, Iran, and Israel, and you've just got this heavy environment of global uncertainty. And you know how it goes. During uncertain times, investors get spooked. They quickly reduce their exposure to riskier assets, which, unfortunately, often includes cryptocurrencies like Bitcoin.
There's also a much longer-term question around institutional adoption. A recent report from JP Morgan Research noted that the growth of private or permission blockchain networks could attract more business interest over time. This is a big deal. It highlights that while Bitcoin's public ledger is totally revolutionary, major banks and enterprises might actually just build and favor their own closed-off private networks, meaning public blockchains might eventually find themselves competing directly for that enterprise attention and capital.
But here's the fascinating counterpoint from the on-chain data. Despite all those very real macroeconomic risks, long-term holders are actually reducing their selling pressure. The people who own Bitcoin are simply choosing to hold on to it. In fact, the reserves of Bitcoin sitting on exchanges, ready to be sold, remain incredibly low. These diamond hands are essentially acting as huge shock absorbers, cushioning the network against the exact market volatility we were just talking about.
Which leaves us with this final, provocative question to wrap things up. Will this surging wave of institutional ETF demand be enough to definitively push Bitcoin past that stubborn $64,000 resistance? Or will these heavy global macroeconomic risks drag the price right back down below that critical $60,000 floor? The foundational engine of the blockchain, it's running perfectly, but it's entirely up to these competing market forces to dictate the financial road ahead. So, which side of the tug of war do you think will win out? Keep a close eye on those inflows and resistance levels. Thanks so much for joining me on this explainer, and as always, keep learning.